Hello traders, good morning, good evening, good afternoon. How are you today? Please give me some okay that you can hear me and that you can see the screen. Wonderful. So how are you guys? I just finished cleaning the drive-through with the snow. That was a lot of snow here. Accumulated in total. It took some time. So how are you guys? Holding well? Trading well? Oh yeah, Roshin. We're here too. It keeps coming and coming and coming and coming, right? But this is February, so we expected that, right? Great. Okay, guys. So let's begin. I would like to discuss some important stuff for today. Let me open here the where is that? Okay. Oh, you don't see my. Oh, what did I do? Now, you see the screen now? It's I click the. Oh, sorry. Click the close before that. Okay, guys. I had a conversation with Costas this morning, private, and I want to explain something that is relevant for everyone. So this is going to be a very, very important thing. Before I show the examples and explain that live, how it happens and what do we do in that cases, okay? Let me ask you these questions. First of all, let's take a look the example that was discussed. Okay, let me ask you these questions, guys. The Euro-Aussie, for example, this is a pair we are long, according to the daily and weekly cycles. Okay? Which means, on what time frames can we look for the setups? Who can answer me here? If we want to trade the daily cycle, continuation to go buys, we trade it on what time frames? Beautiful. Down to 1 hour. Exactly. 4 hour or the 1 hour. That's all. Simple rule. We drop lower to the 4 hour. Do we have two waves here? No. Not yet. So on the 4 hour chart, we cannot trade it yet. But what do we discover here? That on the 4 hour by itself, right? It has a bearish divergence at the end of this cycle. Bearish divergence at the end of the 4 hour chart cycle. Which means we go to the 1 hour chart. What we need to find on the 1 hour chart, and we cannot go lower. We cannot go lower. Why? Because we have the 4 hour chart divergence, which means the two waves have to happen on the same time frame or maximum one time frame lower because of the divergence, because we have the opposite signs against us. So let me ask you this question. Saying this 1 plus 1, would this buy setup be suitable? Yes or no? Exactly. The answer is no. Because this is a 15 minutes time frame. If we want to join the daily cycle, we must have the setup on the 4 hour chart or the 1 hour chart. Now, can we go and trade the 15 minutes? Of course, yes, but only after the 4 hour or the 1 hour formed. Only after that. Why? Because we do have ending cycle on the 4 hour chart against us. Right? Makes sense, guys? So these steps are very, very important to remember when you trade intraday. Are you with the direction or against? Now, if you want to trade 15 minutes time frame, then you must have your cycle with you on the 4-hour chart. But we have a cycle against us because that was a double cycle here, ending with a bearish divergence. It's against the buys. Therefore, we have to wait here and then go buys. And the two waves should happen 4-hour or the 1-hour chart. Now, we did have this 1-hour chart before, trend line. Was this one correct or not? Who can tell me? Exactly, this trend line is correct. Beautiful. And you see the differences? This trend line, it wouldn't pay much. It has a bullish divergence. It wouldn't pay much. It will allow you to get out and break even because you have one-to-one risk reward, and here you have a bearish hidden divergence. So in such cases, you cash out one-to-one or at least move to break even. You cannot make more than that on such occasions. And again, because you're against the 4-hour chart divergence. But can we trade the 15 minutes? No, we cannot. You could trade the 15 minutes at this point. After you got the two waves, let me just show it. Here, after you got these two waves, 1, 2, on the second wave, you can go lower and trade the 15 minutes. So here, if there was a trend line by itself, then you could go and trade the 15 minutes. Ironically, this is a trend line. That's two little candles here that were broken with two waves. That's referring to the same bullish divergence. But let's say this setup is too sharp. We ignore such opportunities. Okay? So if you would have here a better entry, better risk reward in 50 minutes, you can use that because you got the confirmation from the higher time frame. But here, you got nothing. Okay, you understand these differences, guys? Now, this is when we have the signs against us. Now let's discuss about the signs when we have with us. Like the dollar franc. Yesterday we have been talking about the 0.94, 0.95 to accept a deeper correction. Why? Because we had 4-hour chart triple cycle, bullish divergence, and on the 1-hour chart, what was our plan to follow? 3 waves up, 2 waves down. Correct? Here we are. 1, 2, 3, 1, 2. And this is the break of the two candles. And this is our trend line. And this is our entry. And yes, when you have the confirmations on the 1-hour chart with the direction of the higher time frame, then and only then you can go with the intraday. This intraday is with the higher time frame correction. Do you see the differences, guys? Kostas, do you see the difference? Okay, so guys, any questions here? It's very, very important. I wanted to show this lesson today because many times we are wondering during the day, during the intraday, when it's a good intraday opportunity, when it's not. And I want you to remember these steps very simple. Intraday trade opportunity is good when you do not have signs against you on the higher time frames. Okay? Then your intraday trade is good. If you have the signs against, then no, it cannot be good. Okay? Kostas, we want the trend line breakout. That's not a confirmation. That's basically a possible entry. The confirmation that you want on a trend line is when you have 3 to breakout. This is your confirmation for continuation. At that point you enter, or you, if the risk reward is not with you, not good for you, on lower time frame, then you can look for lower time frame breakout after 2 waves and retrace. Then and only then. So what do we do, guys? It's very, very important here is, if you have, this is, let's say, higher time frame, you have a divergence against you, okay, then you are looking for 2 waves down on the same time frame or 1 lower. If you have the divergence against you, that's all. You want to play that safe. You want to play that with the current momentum. And for those of you who do have the Scorpio, for example, you have the Scorpios to identify the lows for you, the last relevant momentum, according to the time frame you design. If it's a weekly, if it's a daily, if it's a 4-hour chart. Okay? Very, very, very important here, guys. And I wanted to go over this lesson. Does anyone have any questions? Now, let me ask you this question. We have been talking about Euro Kiwi sells. That was our plan. Why? Because we had a triple cycle down, and a double cycle up. Well, which actually turned to be a triple by itself, but then improved our trend lines. Now this is with the higher time frame. Daily is bearish, 4-hour chart gave us 3+2. Can we go now lower time frame and trade it? Who can tell me? Can we now go to the 1-hour chart and trade this one? Yes or no? Exactly, of course, yes. The 4-hour chart confirmed us what we wanted to see. Game over. It's simple. It confirmed, yes, okay, let's go to 1 lower time frame and find an entry. And the only last relevant trend on that we've had was this trend with this expansion of the short-term intraday cycle. That was the intraday cycle, extending to closer to the 161.8, right, with a bearish divergence. And then this trend line breakout is correct. Protection here. Take profit. We always go with 1 to 2. Moving stop loss to break even when you have 1 to 1 or divergence against you. In our case, here. Okay? Do you see, guys, how it is building up? And these kind of questions, ask yourself, well, or ask in the Telegram groups. That's the idea. When you go with the higher time frames and you have no divergences against you, you are in safer mode. You have your edge. You have all your chances to end up in profits. All right? Clear, clean? Great. So let's begin here, Costas. It will be the same example. I want to continue forward. If you have more private things, we keep it private. I wanted to share this lesson with everyone and hopefully to clarify and clean the table from some doubts. Okay, guys, any questions here? Yes or no? Perfect. So let's begin. A few updates that we have. We got setups, and I want to explain them. Euro versus the dollar. we had 3 waves down, and we said if we have 2 waves up, we can go and short-term sell, not long-term sell, short-term sell, because we don't have yet 4-hour chart confirmations or daily confirmations for sells. And we got here 1, 2, 3, 4. And in such cases, the only problem is that we cannot connect a trend line because the angle changes, right? What do we do when we don't have a trend line? We trade a breakout of 1, 2, 3, 4. Or on the lower time frame, you connect a trend line. Definitely, exactly. Thanks, James. Okay, so basically this is what you can do. Once you got your 1-hour chart trend confirmed, and again, why 1-hour chart? Who can tell me? According to what we've learned today, we had triple cycle on the 1-hour chart. Where do we want to see the double? On the 1-hour chart. We had a bullish divergence on the 1-hour chart. That's exactly where we want to see the double wave, right? This is exactly where we want to see the double wave. We got a double wave, we got a new high, then and only then we can drop to lower time frames and look for a trend line there. And the only trend line that was there was this one. So yeah, we can do it on the lower time frame, or we can do the same with the 1, 2, 3, 4 breakout of the low with protection above the last high. That's all. So the euro dollar currently is moving around the 1 to 2 risk reward and building up some important things. What are these important things? That was a bullish regular divergence that turns to be what? Fake convergence. See that happening live, guys? It turns to be a fake convergence, which means, in simple words, we should start to pay attention to final levels, final destination. Now this is our zone. The zone of 122 is reachable, is possible. Currently we have no signs against it. This is a bearish convergence, and in lower time frames we have no divergences. So currently the bearish pressure, the short-term bearish pressure, is still on. Down to where? Most likely the zone of 122. Okay? Any questions about the euro dollar? Again, the short term is still in the play. The 161.8 is still following this correction cycle, which we aim down to here. This is our zone, and they fit together. All right? Currently, we cannot have and see any long-term sells. We don't have not false breaks, not convergence, not 3 waves down on the 4-hour chart or the daily chart. Therefore, there are still no reasons for long-term sells. They are only short-term. Okay, you have no confirmations for the stop on the daily or the 4-hour, basically to stop the weekly time. Okay, so this is for the euro dollar. Quick update. Any questions about this one? Do you understand the setup we got here, guys? That was the 1, 2, 3, 4 that we wanted to see after the triple cycle down on the same time frame, the 1-hour chart time frame. Since the angle here is not good for a trend line, we do the 1, 2, 3 breakout, or we go with the lower time frames trend line breakout. That's all. We do have a divergence here, so it's a great combination for a continuation, and that's all. Game over. Okay? Very, very important. For the 1, 2, 3, 4, 2 candles rule help you everywhere, basically. That's all. The 2 candles rule help you everywhere. Okay? Great, so this is the euro dollar. Pound dollar, we are looking for our buys. Our buys should start and happen here. Right, this is our zone, or this is our zone. So we have the 139 zone, or we have the 137 zone. We are currently dancing around the 139, but let's go lower. On the 1 hour chart, do we have two false breaks here, or even one false break with higher highs? No, we don't. Do we have any three waves to the upside yet, or any range so we can buy the bottoms? No, we don't currently. Therefore, pound dollar is still untradeable. Not for the longer term, not for the shorter term. Still nothing to deal with. Okay? See, guys, do you see how I go over my list and basically decide what's clean following the rules, what's not? Exactly by asking myself these questions. Do I have the clear setup? Do I have the level for the 4 hour chart longs? Yes, I do. Do I have a setup? No, I don't. If I don't have, do I have a reason to trade? No, I don't. Very simple. Very simple. And we should not try and complicate it. If we do, we increase the room for our mistakes. Okay? Good. Let's continue. New Zealandian dollar. Short on this pair for the short term. We are going, just reminding you, right? This is our zone. 38 down to 50 on the short term. It matches beautifully with this extension and this extension. It all brings us to here. That's below 0.72. On the 1 hour chart, we got triple wave down and we got double wave up. 1, 2, 3, 1, 2. Which means in that place, can we go? We have the divergence here. Which means in that place, can we go to lower time frames and trade it? Yes or no? Who can tell me? Once we have the setup completed on the 1 hour chart, can we go to the intraday and find the setup here? Yes or no? According to what we have learned today, guys, who can answer my question here? We have the confirmation. We have the setup. Can we go to the lower time frames and find ourselves an entry on the second leg? Yes or no? The answers we get here: yes, 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 yes. Everyone says yes. Anyone thinks no? Does anyone think no? Beautiful. Everyone think yes. Now let's see, do we have an entry here? We have the extreme, that's right, but extreme is not really relevant on the 15 minutes time frame, so I wouldn't use that personally. So my answer is no. My view, not my answer. My view is no, we don't. There is no divergence here. Right? So what can we do in that case if we have the 1, 2, 3, 4? Do we have 1, 2, 3, 4 here? No, we don't. Well, it's all stuck inside this one candle after the news yesterday. All this move. Therefore, all the setups here, unfortunately, are not usable. The only way we have a usage here is this trend line. The same trend line that we saw on the 1 hour chart, which was broken right now. And here comes the question, guys. This is a classical sell opportunity from here with a stop loss here. What is the question? The only question we have to ask ourselves in that case, before you go and hit the sell button, I already see the hands going to the sell, 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 sell. This is your risk. The reward, as we said, on the extension, and the 38.2 is right here, which means we have above 60 pips on the stop loss, less than 90 pips on the take profit. Is that a good risk reward? Yes or no? Exactly, no, because it doesn't even allow us to move stop loss to break even at the 1-to-1, because we almost hit the take profit at 1-to-1. What do we do in that cases? We are looking for two waves retraces, and yes, that could be intraday. That could be something like that, to try and improve our risk reward and then try and go for sale. Does that make sense, guys? Do you see how the puzzle builds into one picture here? When you can build yourself one clear picture, this is a setup you can trade. When you cannot build yourself this one picture, that means you're gonna force things to happen and bend some rules on the way. Do we really want to do that? No, we don't, because we decrease our chances to end up in profits. All right? Classical. So these lessons are very, very important, and I'm glad that the market allows us to see that right now, because these are the most valuable ones. When it's clear and obvious, then it's easy to make money. When it's hard and we need to ask ourselves a few questions, that's where traders tend to do mistakes, because we forget to ask ourselves the questions. We basically just see, oh, that's a good trend line, let's sell, and we forget to ask the most important things. Okay, that's a good question, Fanny. On the 15 minutes entry, where would the stop loss be above the high of the 15 minutes that you will get? That's the idea of improving yourself a risk reward. So let's assume you get yourself here 1, 2. This is your entry, assuming that you get here a divergence, right? Bearish divergence that ends your trend line. You got yourself the breakout entry, and your protection would be right here. The idea here is you decrease the risk and improve your potential reward. Okay? So this is what we do here. Okay? Great. That was another update that I wanted to go over. The rest, we are still on the same directions. Aussie franc. We still want to go above this high in order to go longs. We still don't have it. Therefore, we have no reasons for our long-term longs here. And as the same question that I'm going to ask you now, guys, we had a bullish divergence here. We need two waves up on the 4-hour or the 1-hour. Do we have them? Exactly. Yes, we do. Can we trade them? Yes, we can. Only because we have the two waves on the same time frame or one lower time frame, not two lower time frames. So 15 minutes time frame, for example, would not be suitable. This would not be an entry. This would not be an entry, because only now you have yourself the 4-hour and 1-hour showing on the same view, and that's the double wave. Now the question that we have to ask ourselves here, do we have two candles rule? Yes or no? And this is an important question. Who can answer me on this question? Do we have here this correction? Do we have a two candles rule? Let's put it the line here. This is a very important question, so please pay attention. I have one yes, I have one no. Marin, your answer is very beautiful. I have two no's, one yes. Two yes, two no's. That's interesting. That's like an auction. So what do we have here? Yes or no, guys? Okay, let's ask ourselves the first question. Where is the last green candle for higher highs? This. About this one, we have no doubts, right? Now let's continue. Ask ourselves the next question. Where is the second candle that we can say do we have two higher highs, two higher lows? This candle is irrelevant as it's inner. It's inside this move, so it's irrelevant. This candle looks good, right? But then we figure out that it is not suitable with this candle. So the only candle before we have is this. And this is the low that has to be broken. Was it broken? No. Therefore, that's not two waves correction. And therefore, put a big X on such opportunities. That's where it becomes tricky. That's where it becomes with increased chances to fail. The bigger potential to fail, bigger than the potential to profit. It can still profit, definitely, but the chances to end up in a loss in such cases are bigger. Okay? Correct, Costas. Okay, so what was the question? Why the third candle wasn't suitable? I assume that this is the one that you are asking about. Hold on, where it's gone? No, what's going on here? Here, Sarah, is that the one you ask? Yeah, because on that situation, right? You have the low, and basically here you have two higher highs, two higher lows. But this is lower than this candle. So it doesn't give you the setup. You see what's happening here? You want straight higher highs, higher lows. It doesn't answer the condition. The only one that does answer the condition is here. And these two you connect for the only ones you can connect for higher highs, higher lows, without lower lows in the middle. On this one, you have lower lows in the middle, because if you connect this, look, if you connect this, what you get here is a lower low. And that's what makes it not correct. Okay? Little details, I know, little details, but again, yes, we can be without them. I agree, totally. But the question is, again, do we want just to find a reason to trade, or we also want to find a correct reason why not to trade? Such questions are very, very important to be asked. Okay, let's continue, guys. Let's see if we have anything other important. Euro versus the pound has the levels and well, this one I didn't check, to be honest. No two candles rule here. No, still nothing to do with the euro pound. Euro CAD and Euro OZ, these two are interesting because they are now providing the corrections towards a possible continuation up. I want to remind you, according to the weekly cycles, we still have a potential push higher. We did have a false break there. We might face some kind of ending here, but if we do have an ending, we need triple cycle down, not double. Currently it's double, so we're still after longs, and these longs are suitable from here or here. We need to see where we get a divergence, and then on lower time frames we can start looking for the buys. Okay, so that's shared for the Euro Aussie and the Euro versus the Canadian. The rest of the things are still unchanged actually. Gold and silver did not break higher. Dollar ALS did not give us any two waves correction, so no action yet. New Zealandian franc, I was asked before. We have only one leg currently on the 4-hour chart, and on the 1-hour chart, dollar New Zealand franc. Let's see if we have the two candles rule. This one irrelevant. No, we have nothing here on the Kiwi franc yet before we sell. On dollar franc, do we have reasons to close the buys? Let's see. Well, that's a bearish regular divergence turned to be a fake convergence. I would cash out. If you have a good risk reward, yep, I would cash out at least with partials. At least with partials. We still might dance here around this zone, right? But I would cash partials definitely, and would be keeping an eye for the final target on these areas. So the question here, Costas, on the risk reward, if you got your money that you need, perfect. You can cash out partially, or the minimal important thing to do here is move stop loss to break even. Make sure there will be no loss in such case. Okay, so dollar franc that we planned yesterday for buys is basically one of the good ones that is paying. Okay, indices. We are on 161.8 of the correction. We are now building up on the intraday 15 minutes triple cycle. Very, very sexy level. Bearish hidden divergence forming on the 4-hour chart. Bearish regular divergence forming on the 1-hour chart. Setups might go and start to build here, guys. Attention is required. We might start and see finally some action coming soon. That's relevant for the Dow Jones. That's relevant for the Nasdaq, slightly higher. Where is our DAX? DAX is building up the second leg. Let's see where we have it. Leg number 1. That's the level. So basically for the DAX, we still have potential slightly to go higher before the move down. So start to keep an eye here. We might go and start to face actions on this area, and that might start to happen today, tomorrow. That's the levels what we need to keep an eye on. Aussie Kiwi, no, Aussie Kiwi we currently have nothing, and I wouldn't deal with Aussie Kiwi yet. Wouldn't really deal with that. The good pairs that we have going, well, followed our plans. Dollar franc, euro dollar, euro kiwi. These two following our plan. The rest still did not provide us any opportunity to deal with them. So we are waiting. Pound cat still ugly. I myself don't like it. These kind of movements, seriously, I always prefer to avoid. Pound Aussie is the one that got us a breakout here. Not holding it to be honest too strong. Oh, it's actually even didn't break. No, Pound Aussie even didn't break, and holding the trend line still. So yeah, still a possible action for buys definitely, but can't say we have any classical reasons. What's my view for Pound Kiwi? My Pound Kiwi still nothing. Sorry. I do want to look for buys. No doubt. I do want to look for buys, and hopefully we get it right here, the 188 zone, because then it's the bottom of this range. Then it's it's actually not on the trend line. The trend line is going further down, but we are on the bottom of the range. So this is the minimal, the first place I would be looking to buy with. But I don't want to deal with the pound kiwi at this moment. I don't think it's classical. Cat franc, you say? Let's see, cat franc. Cat franc, we want long-term buys. Currently, no false breaks and no 3 waves down. Again, the question, what do you do in that place? Do you want to go versus the daily bullish divergence and the 4-hour chart divergence, yes or no? We don't have 2 waves on the 4-hour chart here, so the only first 2 you can start to connect would be the 1-hour chart. Well, yes, you can deal with that, but again, that's where you got yourself the intraday trade, right? Just remember the risk reward. Just remember the risk reward. That might be the case. Can I say this is the best? No, because of you know that for long term I still want to go for buys. But yes, this one is correct. This one has all the technical reasons to play it correctly. Can I say I'm crazy about it? Well, not really. Can I say it's wrong? Definitely not. It is correct. So, question is, what's next? Are we for a new low, which is likely to happen, or are we here for triple, double, and bigger correction? Time will tell, right? Technically, yes, it's correct. Because if that was the question, then the answer is yes, this is correct. You got yourself the 1-hour chart double, divergence, 2 candles rule in play, levels. Definitely, we have the level, and 15 minutes. Get yourself a better trend line. So the answer is yes. Okay, oil. Oh yeah, that's a good one. Definitely, oil is forming the 4-hour chart extended double wave correction. Currently, the short term is pulling down. But what we do need to pay attention here, guys, is the fact that we had 1 false break completed, and we got ourselves 2nd false break completed. Well, with the divergence only on the moving averages, no histograms, and now we have ourselves lower lows. So the main momentum for the oil is yet bearish at this stage. We don't have anything on daily yet. 4-hour chart has the 4-hour chart doesn't have the convergence because it's a divergence right now. No, I wouldn't deal with oil for long term yet. For short term, 100% yes. 100% yes. It's a good one, and the momentum is strong. The level, the potential is strong to the downside. So the answer is definitely yes, and I wouldn't do much on the longer term yet. There is still chance of 69 or 70 zone. We will see how it goes. Anyway, currently, yes, it is still sells on the short term. Bottom line. That's all. Not sure it will give the opportunities to trade, but yes, it's correct. Okay, cryptos. Ripple is breaking up the trend line. False break completed. Momentum changes. As long as this low holds, Ripple is bullish. Basically all of them. I can go all over them, but I will not. I will just give you the ones that make it. This one is definitely worth to pay attention to from my point of view. Litecoin, 2nd false break on the bottoms. This is the trend line. If we get a breakout, we get a buy here. Ideally with higher highs, but breakout, we get ourselves the bullish momentum beginning. Ethereum, we got ourselves this. Where is the trend line? Where is my chart? Here, we got ourselves the trend line broken, which means bullish versus this low. The best thing to do in that case is improve your risk reward. Dropping lower, this is a 4-hour chart. Dropping lower, we have all the reasons for that to be a low. And the one that everyone loves so much, the Bitcoin, and the one that is holding this trend line so beautifully so far, with a bullish divergence on the daily chart, with the attempt to break the 4-hour chart trend line, and on the 1-hour chart providing us kind of a triple cycle opportunity, which is basically something like here. So yep, if we get 2 waves retrace, we get ourselves the buys. Again, we can start and go over all of them. They are pretty much in these conditions when they follow each other. Okay, so we have Dash, which is also triple down, double down. We have the breakout. We have the Litecoin. We have Neo, which I love a lot. IOTA, which I love a lot. Completing classical triple movement down with a false break, with trendline breakouts. Really looks good. And the risk is tiny, especially if we can improve it on a bit lower levels, versus the potential is simply in our favor. Sun sentiment also is amazing. OMG, of course, this one I know many traders are after, and I love it. I love it. I love the way it formed. It gave us a special cycle here. No, we don't have a divergence on the last 2 lows. We have a divergence on the big 2 lows from the daily cycle. Same with the ETP. All of them. Okay, so you choose and you improve the risk reward. No, it doesn't make sense to go and trade all. You choose the ones that makes the most sense for you and give you the best of the setup in technical terms, and go with them. That's all, guys. Any questions? Yes, no, quick. Wonderful. So thank you very much for being here. I hope that the little tricks that we saw on the beginning help to clarify you the situations you face with during the day a bit. And that was the idea of that. Costas, thanks for bringing it up. It's valuable for you. It's valuable for everyone else, I'm sure. And thank you for being here, guys. I wish you a wonderful day. I'll see you later today in the Telegram groups, and tomorrow we have a meeting 1 hour later. Don't forget, please. And that's all. Thanks, and enjoy your evening, guys, and your day. And good night for those who are about to retire to sleep. See you around. Thanks for being here.